Hello, my friends. My name is Rainer, and welcome back to this week's market analysis. So, in this week, I'd like to talk a little bit on how do you know when you're wrong, because I see, most traders they put on a trade, and when price goes against them, and they are starting to see their account bleeding, day after day, but they're still not out of the trade because they have no idea when they are wrong. So, before we put on each trade as a trader, we have to know where is our anchor point, where is the point whereby if price touches that level, it would invalidate our trade and tells us that we are wrong. And when we are wrong, we have no business continuing to be in that trade. So in this week's market analysis, I will share with you a few trades I took, a few trades that I've lost, a few trades that I've made money, and share with you where I actually managed my trade, how I did it, and I put my stop loss at a level where I know where I'm wrong. Because the moment price touched that level, I want to get off the trade. So this is what I want to share with you this week, and I'll see you over there. Alright, boys and girls. So before I carry on, maybe I'll share with you something, right? Because a trader basically left a comment on my website recently. It says that, Rainer, why are you calling us boys and girls? We are all, old, we are all auntie, we are all uncles, so why do you keep calling us boys and girls? And my reply is this, honestly, there's a good chance that you, who is listening right now, could be older than me, but it is no way or any form of disrespect, because I find that each and every one of you are basically young at heart. Because to undertake trading, you basically need the emotional strength and the tenacity to undergo it. And if you can do it, if you are trading, it doesn't matter whether you're making money or you're losing money, but as long as you're attempting to learn, then I feel that you are young at heart. Because you're willing to learn, you're willing to explore new possibilities, and you definitely have to know that, I feel that you are young, and this is why I call you all boys and girls. It's no way trying to disrespect any of you, but to remind you that you are young and there's endless possibilities ahead of you. So with that said, let's carry on. So on this chart, okay, this is the chart of a Palladium. And let me walk you through this trade that I took. So at this juncture, basically over here, I think for those of you who have been with me for a while now, I did mention Palladium some time back. I said I went short. And basically looking at this chart, on this 4-hour chart, I noticed that the 20 EMA, basically this red line over here, has been acting as dynamic resistance. And also when I look back onto the higher time frames, the weekly chart, I noticed that Palladium also broke out of a multi-year low. So with all these factors coming together for me, and the forward chart showing me that the 20 EMA is acting as a dynamic resistance, I knew that I had a trading opportunity to short this market. So what I did was, I told myself there are two ways I'll go about it. If price does retrace back towards the 20 EMA, I'll attempt a short. Likewise, if it doesn't retrace, I would attempt to trade this breakout towards the downside if price takes out this swing low over here. So the 20 EMA did not got me filled. So basically what I did is I took a short when price broke out of the downside. So basically I traded the breakout. And as you can see, then price went in my favor still. And you can see it's pretty much a smooth trade right from the start. Basically I had a sell stop order here. Price triggered it and went in my favor immediately, right? There is no pain in this trade. Price just simply went in my favor immediately. Then we have this consolidation over here, a flag pattern. Then price break out lower, another flag pattern, price then break out lower. At this juncture, price started to retrace. So I'm in the money and I'm looking at it and I ask myself, how should I trail my stop loss? Because, a trade, the moment you put on doesn't mean that's the end. You have to manage it. You have to know where you'll get out if you're wrong. So now I'm looking to get out of the trade when I'm wrong. So I'm looking at this chart and I'm thinking the 20 EMA was my basis for the trade because it was acting as a dynamic resistance. And right now, the 20 EMA is still acting as a dynamic resistance. So logically speaking, I should base my stop loss on the 20 EMA. So what I did was, I used the 20 EMA as a reference. I did not put my stop loss at the 20 EMA because price could simply touch the 20 EMA and then trade lower. So what I did was I just placed my stop loss over here, a buffer above the 20 EMA, And that was my stop loss on how I managed the trade. Because if price does trade higher, basically I know the 20 EMA, the dynamic resistance has been broken, and I don't want to stay in the trade any longer. So for this trade, that's what I did. And let's see. You can see that, yep, over here eventually I got stopped out on this candle when price broke out of the 20 period moving average. And I'm perfectly happy with it because I had a plan, I followed it, and I executed accordingly to what I had in mind. And if you notice right now, price then went down once more, and most traders will feel the pain. I know, man, if I hadn't exited my trade, I would still be in this trade, the money would be still rolling in. And again, and please hold on that thoughts. Please hold off that thoughts. Because you as a trader, it's not possible to catch every single move in the market. Your trading plan is only meant to capture that certain move of the market. For me as a trend follower, I'm supposed to capture trends in the market, but it does not mean that I will capture all the trends in the market. No, I can't do that. I only can capture a certain number of trends or certain kind of trends that my trading plan allows. And I got stopped out of this trade. There is no issue with me. The next thing I want to ask myself is, where is the next opportunity to get short this market? And if there's a trading opportunity for me to get short, I'll look to get short. But if there isn't any, then so be it. I will live with it. I will not blame myself. I will not have any negative thoughts because I know I followed my plan. I know my plan is unable to capture all kinds of trend in the market. It's only meant to capture a certain type of trends in the market. So right now, I'm looking for a new trading opportunity to get short on Palladium once more if the chance presents. If it doesn't, then I'll move on. I'll find something else that fits the bill. So this is my take on Palladium. Now let me share with you soybean. So again, soybean was a market that I traded. So for those of you who have been with me, I traded soybean. And let me share with you this trade as well. So basically soybean, I see lower highs here, 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 and here coming into this multi-year support. So basically it's a bearish price action to me because the trend is still down and I had this series of lower highs coming into this multi-year support. So I suspect, there was a cluster of stop orders just below it, and what I did was I placed a sell stop order in anticipation for a breakout towards the downside. So I had my sell stop order somewhere around here. I got filled, then price went in my favor. So the first 3 or 4 days, this trade was pretty painless because price almost immediately went in my favor. And before I continue, let me share with you that my initial stop loss was somewhere here. Basically about 2 ATR from my entry. So as I was saying, price went in my favor and it was very painless for me for the first 3 or 4 days. After which, this is where the retracement came in and I start to see my open profits getting reduced, eroded, and it became a loss. At this point of time, I still have not exited my trade because reason being is obvious. To me, it was that this area here, it could be a potential support now acting as a resistance. So if that is true, then it does not make sense for me to exit the trade where this potential support turn resistance could potentially hold up. So I did not exit my trade just yet. I left my stop loss over here at its original level here. After which you can see that price eventually, what happened is that it traded lower for a while, back in my favor once more, and then this rally higher, stopping me on my trade over here. So basically my stop loss got triggered and I got stopped out of this trade. And even though it's a losing trade, I'm perfectly happy because why is that? I followed my plan. I had a plan in place. I had a stop loss at an area whereby if price trades the stop loss, I will know I'm wrong. I will know that my initial trade idea is invalidated. So my stop loss is always there for a purpose. It's not there based on a random figure that I like. No. It's always based on an objective concept that I have in mind. Because, like I've said earlier, if the previous support turn resistance does hold, it does not make sense for me to place my stop loss in that area. So my stop loss is away from it, whereby if price does touch it, right? Because if price does retest this area over here, it tells you that chances are soybean did a false breakout. He had a false breakout, then it trade higher. And there's no business for me to stay in this trade any longer. And I want to get out. And get out at it, I get out of this trade. And looking at hindsight, well, you can say that, wow, Rainer, that's a nice cut because, price is all the way up higher once again. well, yeah, on hindsight, it could look good. And likewise, price could just simply stop me out of my trade somewhere here, then it goes back all the way down once again. That could happen as well. And if that happens, I'll be asking myself where else I could look to, re-enter this market. So this is my take on soybean. This is what happened, and let's move on. So one more to share. If we have time, maybe we'll do two more. So this is the chart of dollar yen. So again, for those of you who have been following me, actively, dollar yen is a pair that I'm in for quite a while. I had a buy stop order above this swing high. I got triggered when price traded here. Then it rallied. And again, the first few days, it was easy. It was painless for me. Price rallied in my favor. And, it's just basically seeing green in your account. After which, the drawdown came. Price then retraced against me. Then it starts consolidating. And right now, it closed somewhere around here. My initial stop loss is over here, below this swing low. I have not shifted my stop loss because, again, for similar reasons like the soybean. Because this resistance could now act as potential support over here. It could act as previous resistance, then support. And it does not make sense for me to cut my trades into such area, because if this level does hold, what could possibly happen is I see a retracement and then I see another move higher. That could happen. So I've actually placed my stop at an area whereby if price goes against me, whereby if it touches my stop loss, I'll know that I'm wrong. And this would probably be a false breakout. So my stop loss is currently over here. I have not touched it. And say for example, price then traded lower all the way down. It's telling you that this previous resistance turn support has been broken. That area isn't acting as a support anymore, and I have no business staying in this trade any longer. So I'll be watching closely what happens next, because I do not know whether price will go up higher or whether it go down lower. I obviously have no idea. And this is why I always have a stop loss in place, because I'm always prepared to cut the trade when I'm wrong. So last but not least, right, we have a little bit of, squeeze a little bit of extra time. I want to share with you is this trade. All right, it's not a trade I'm in, but it's something I'm looking at. So it's basically a chart of Aussie dollar. And you can see that this pair is clearly still in a downtrend. You have lower highs, lower highs, lower highs, lower highs, and lower highs over here. And looking at the daily chart, for those of you who were with me at my technical analysis 102 trading webinar, I mentioned that, if you see head and shoulders pattern, not at market tops, but at market's bottom, like this, right? Because clearly price is bearish, and you see this head and shoulders pattern over here, here, over here, and this is the neckline. Chances are it's telling you that, this is a continuation move. And right now you see that price, this candle over here, has basically broken off the neckline. And I'm guessing, right? I'm just guessing that, we could see further downside on the Aussie dollar in the coming days. So, we'll just keep an eye on this, see how it pans out, and I'll look for trading opportunities to trade the Aussie dollar. So that's all I have for you, boys and girls, this week. I really hope you enjoyed it. I think it's something different because we talk we talk quite a lot about trade management. We talk about where you should get out of your trade when you're wrong. And I think that is really, really, really important as a trader. So that's all I have for you. So if you have any comments, just feel free to leave it below. And with that, I wish you all good luck and good trading. I'll talk to you soon.